Hello everyone, this is Rob McDougall from Zhang Financial here with your weekly economic update. Today is Monday, February 6, 2026, and I want to apologize up front. Never got around to the podcast last week, so my apologies. So this week, let's take a look at the economic activity released last week. We started off last Monday with very positive durable goods orders numbers. Now the highlight number was expected to come in at 3.7%. For November, came in at positive 5.3. And then the big news that really didn't offer anything, the Federal Reserve rate decision was announced on Wednesday, no change. Range remains 3.5 to 3.75, very much as expected. Federal Reserve, even in the commentary afterwards, no surprise to the markets at all. It is clear the Fed, under Chairman Powell, probably will not make another change. He's done in May, so the Fed funds future market still is priced in probability of more than one rate cut this year, but it's not going to come from Chairman Powell. So unless something extraordinary happens, we just saw our last rate cut from Powell last month, and that will be it. We'll also talk about the nomination for the new Fed chair in just a moment. But we'll finish off with the economic data from last week, the initial jobless claims. That came in a little weaker than expected. It hardly moves the needle. Expected 205 came in at 209. But the information, the inflation information on Friday, PPI, this was disappointing and a little bit surprising. Certainly the magnitude was surprising. So the PPI month over month was expected to be up 0.2, as was core PPI. But the PPI headline number came in at a positive 0.5, and the core PPI came in at a positive 0.7, both much hotter than expected. And again, it's that sort of information that suggests we're probably not going to see a Fed rate cut for some time if inflation is not going to move down. So, Atlanta Federal Reserve, their expectation in terms of the fourth quarter GDP number, they had been up 5%, 5.4% just a week ago. They really took that down, although it still would be a very strong number. But their expectation now for fourth quarter GDP, yet to be announced, positive 4.2%. Inflation expectations, just real quick last week, that PPI number probably wasn't the only factor. But it did move inflation expectations up next 10 years. The 10-year minus the tips was 2.32% last week and rose 4 basis points by the end of the week to 2.36%. Now the Fed funds future market, the next Fed meeting is in March. The expectation of a cut, 15%. That's pretty much what it was. By the end of the year, the odds of only one additional rate cut, 7%. So there's a 68% probability built into the futures market, expecting 2 rate cuts. Given what the Fed told us, seems possibly aggressive. So we'll end last week by discussing the Kevin Warsh nomination by Trump to be the next Fed chairman. The markets love this. Happened on Friday, and it didn't really move. It moved the fixed income market a little bit. Stock market, not so much, but just crushed gold and silver, which had been high-flying, amazing 50, 60, 70% gainers over the last year just because of the nomination. So Kevin Warsh, not that I know a lot about him, but his background is he was a Fed governor back in the late 2000s, Morgan Stanley exec. He is known for proposing or espousing the fact that we can end up with strong economic growth without inflationary pressure because of AI productivity. And we mentioned on here, like the third quarter productivity measure for the U.S. economy was just a blockbuster positive 4.9%, which can't ascribe all of that contribution to AI, but there's got to be some part of it. So he's definitely in the camp that AI is going to be a big productivity enhancer for the U.S. He also thinks in terms of quantitative tightening, so the Fed balance sheet is too bloated in his terms. And what he would do is likely, instead of making rate hikes at some point, is simply selling off some of that balance sheet. The market likes that. Regulatory leveling. So in terms of the banking industry, he feels the banking regulation has been bifurcated, definitely has. The large banks have a much easier landscape regulatorily than the mid and small guys. So it's expected that Kevin Warsh would work to smooth out those regulations and put the regional banks on closer footing with the money center banks. Last thing, the market, again, gold and silver got cracked really hard. Gold was down 9%, silver down 20%. And the thing that the market really likes about it is there's been so much concern about Trump putting someone in that would be a complete lackey of his, and it would just be an extension of the administration. Well, the market feels this as a renewed confidence that we will indeed, at the end of this process, still have independence for the Federal Reserve. So, all of that noise from last week, what happened in the markets? Hardly anything. S&P 500 up 30 basis points, so barely moved for the week. Growth was down, though. Growth was down 1.8% last week, as was small cap, down over 2% here in the U.S. Now, international stocks fared better. Developed markets, ex-U.S., up at 1.1%. Emerging markets, up 1.8% last week. In the fixed income market, with all those gyrations last week, hardly moved. Bloomberg U.S. Aggregate Bond Index up 3 basis points, with the 2-year yield up 7 basis points, but the 10-year only up 1 basis point. Now, let's look at economic activity to be released this week. So it's probably already released today. ISM Manufacturing today for January had come in at 47.9 in December, was expected to be a little bit better, still below the 50 demarcation limit, but is expected to come in at 48.5. Now, tomorrow's one jobs number, hardly market moving. It's a JOLTS job opening that's expected to continue to go lower. So the November number came in at 7.146 million. It's expected to come in a little lower at 7.1 million. Employment numbers, again, on Wednesday, we'll have the ADP change number. ADP for the month of January is expected to be up 40,000, and for the last month of December, it was up 41,000. As always, initial jobless claims on Thursday, that's expected to come in at 210,000. Last week, it was 209. Friday is the big day. It's the non-farm payroll. This one will be very interesting. So for the month of December, non-farm payrolls were up 50,000, but we also had negative revisions, so it didn't look great. The expectation for January, 70,000 new non-farm payroll jobs added. We'll see. Average hourly earnings expected to be consistent with what we saw in December, and that's a positive 0.3% month over month. And lastly, the Michigan Consumer Sentiment Preliminary Index for February. Month of January, it came in at 56.4, and it's expected to be down even more, a little more, down to 55.8 for February. So that is a wrap-up for our economic update. To you, we thank you very much for your attendance and look forward to seeing you next week. Thank you.